All right, guys. So let's get started. All right. So the first thing I need to note is if you're joining the Discord and you've seen maybe some of my gains personally on like Twitter, TikTok, I don't know, wherever you guys are from, wherever you've seen my stuff, please, the first thing you have to understand, those gains are going to be not achievable for most people that are first starting out because we're trading completely different sizing, right? So some people will literally join the Discord and then they'll think that they're going to make the same amount of money as me, right? Everybody has different sizes to their trades and everybody trades a different account. So the most important thing is compare yourself to yourself. The only thing we want to do is get better ourselves, not compare ourselves to other people. So if someone's making a certain amount of money, good for them. Obviously, we want to be happy for other people, but we can't compare ourselves to them, right? The only thing we can do is compare ourselves to ourselves. So if we have, let's say, $1,000, we have to be realistic with how much money we're going to be making on that $1,000. A lot of people think you're going to be you're going to be making 10x that in a month. Probably not going to happen. Maybe there's a small chance it will, but it's probably not going to happen, and that shouldn't be your goal. The main goal with trading and how you should start off your trading journey is finding consistency. If you literally have no idea about options or trading or technical analysis, please don't even put your money in. Literally paper trade for like the first 1 to 2 weeks. I'm sure most of you already have like a deep understanding of stuff, but if you don't, paper trade or at least get an understanding of the plays that are being taken and what trading even is, like what options is, because many people are trade options and they don't even understand what options are, right? This is not going to be some sort of like get rich quick journey. You need to want to stick through this, and that's where the money is going to be made. If you give it at least 2 to 3 months of your actual time and put effort into this, I guarantee you're going to get results. But if you think you're just going to hop in, you're going to just copy some trades, things like that, you're going to make money in the long term, it's not going to work. You might make some good money, but then you might lose some money, right? Because you're not taking every single trade that a certain person is taking. So it's going to be almost impossible to copy someone's results, especially since we all get different fills, stuff like that, right? There's so much different variables to trading that it's almost going to be impossible to copy someone's results. That is why I always encourage you guys to learn from the trades that I personally take. Use them as a guide to get into to setups that you like, but learn from it. That's the most important thing because again, if you study literally the people who are making the most money in the Discord, I can tell you myself, I've messaged like everybody who I see is doing really good in profit and losses, or that I personally know that I work closer with. Whenever I message them and ask them what they're doing, that's like making them super profitable compared to other people, is they're literally telling me they learned the strategy. It took them like 2 to 3 weeks, and they're just using my trades as a guide to get into the stocks that they have the most conviction in, and then they're taking some of their own trades as well. Right now, obviously, when you're first starting out, you're not going to be at that point where you could do that because it's going to take time. But that should be your goal. That should be what you're aiming for. And obviously, some of you guys don't have much time to be able to sit on charts. I get that, right? Use me as a guide, use all my trades as a guide, the focus list as a guide, everything to guide you to success. But you want to make sure you understand that you're not always going to get the exact same results by following the exact same trades unless you literally take every single trade at the exact same trims, at the exact same size, and the exact same everything, right? It's going to be very, very hard to recreate the same results. So you can probably get close, but it's going to be very hard to recreate the same results, which is why I always encourage people to use the Discord as a guide versus um, trying to just copy everything, because that does no good for you in the long term, right? And I think every single person that's in here is smart enough. If you're in this Discord, you are smart enough to understand that to be profitable, you need to think long term, right? You just have to. And I think that every single person in here wants to make trading either a career and go full time, or at least make it some sort of like actual profitable source of income that you could have over the next few years. And the only way to do that, again, is to put the work in. And we have all these resources in here that allow you to do that. You just have to put the work in yourself, go through all this stuff, show up to these live classes. I guarantee you, if you do that for like 1 to 2 months, whenever you have a little bit of spare time, you're gonna just level up like insanely. Like this is where most people have the most success, um, from what I've studied, of everyone that's had that type of success in the Discord, right? So just keep that in mind, and keep in mind the fact that if you are new to trading, you are going to be emotional. It's literally like normal, right? Like every single person in the world, when they're first starting out to trade, they're going to be emotional. When you're putting money on the line, it's obviously hard to see it go down. And when it goes up, you're also going to be emotional because you're making money and you don't want to lose those profits, right? So you need to make sure that you are you are locked in to the fact that there's going to be emotions in trading, but we need to try to limit them as much as we can, right? That's the goal. If we can limit our emotions, then we'll be able to stick to our plan much better. So yeah, when you're first starting out, the emotions are going to be there. It's just something that just happens, right? But you need to understand why you're in the trade and have your own conviction to be less emotional. Because if you don't know why you're in something and you're just following someone blindly, it's going to be very, very hard to basically have your own conviction on things, right? And then you're not going to be able to hold the winners for longer, and you're going to take big losses because you don't know what to do if the stock goes red, right? So let's keep it really simple. The most important thing that you want to do is you need to create a plan, right? This is what risk management is. Like when it comes down to the core of things, creating a plan is literally all risk management means. So if you don't have a plan, you don't have risk management. So what I mean by that is before you get into a trade, you should be knowing exactly what you're going to do if certain things happen, because we literally cannot control what price does, right? So if we go on TradingView right here, we enter the stock right here, we can't control what price does, right? Like we literally cannot control. The market controls what price does. It'll choose whether it wants to go up or it'll choose whether it wants to go down, and we cannot control it. The only thing we can control is our own executions and our own orders. So knowing that, why would we not want to have the best plan in place to make it so that we have the best chance at profitability versus trying to guess what's going to happen, right? That's the whole goal of risk management. And that's why having a plan is so important. So when you're first starting out, this is something that you need to make sure that you keep in mind. You need to have a plan for what is going to happen in the stock. If the stock doesn't go your way, what are you going to do? Where's your stop loss, right? That all needs to be like, you need to know all that before you even enter the trade, or else you're just going to keep second guessing yourself and you're going to be like, oh, I should just move the stop loss lower. It's just going to keep coming down and then it's going to bounce. And then you're going to get to a point where you're down like 80% and you lost all your profits in 1 month that you worked hard for because you just made a stupid mistake, right? That's how it ends up going. So you have to make sure that you have a plan and that you stick to it, because a lot of people, when they're first starting out, they might even have a plan, but they don't stick to it. And that's the part of discipline that you need to learn. And I promise you guys, if you're able to get over this hump, this discipline and risk management hump in the beginning of your trading journey, you're literally going to be ahead of 99% of people, because every single person who's been at this for more than a year, the only issue they have is the risk management part. And I could probably say that with like a 90% certainty. Like everyone that I've talked to that's over a year, it's risk management. Risk management, not having a good plan, not being able to stick to their plan, and not having the discipline to wait for their setups. That's literally the thing that separates great traders versus good traders, right? Good traders could have a good plan, everything like that, but they don't stick to their plan. So that is something you have to understand. And if you're able to get over that off like the first 1 to 2 months, and I know that for a fact because I was a person who struggled with this at the beginning as well. And I was just kind of gambling for the first 1 to 2 years. I didn't really have a plan. I didn't know what to like, where I'm going to take my stop losses. And when I had a stop, I would keep moving it down and down and down to the point where like when it was down 80%, I was like, whatever, I might just hold this to zero and pray that it comes up. It just doesn't end up coming back. Like sometimes you might have that one time in a lifetime where it does, but 90% of the time you just get burnt and then you're just losing your account, right? There's no point to do that. It's pointless. So try to be smart about things. Like, I really urge you to be smart, especially in this cycle that we're in right now in the markets where there's so many opportunities. Why would we want to give back all our profits from a whole month in one day? Like, that concept should not even be possible, right? Obviously, if we made like $1 on the month, then I get it. But like, if we're up on the whole month, let's say like 10 or 20% on our account, there's no reason we should be giving back 20% of our account in one trade, right? And that's why I keep my risk management so tight in terms of taking the percentage of the account that I take, because there are going to be red days. Like, that's literally a part of a part of the journey, right? There's going to be days that are going to be red, and there's going to be times, especially if you're a swing trader, that the stock is going to gap down, and then there's nothing you could do, right? But that's why sizing is so important, and the risk management that comes with that is going to keep you in the game. And that's the most important thing, because as long as you stay in the game, and if you trade the right strategy and you have the discipline to stick to your plan, you're going to be able to make money over a long period of time. And that's exactly what you have to think, how you have to think about this. You have to think about it over a long period of time, because if you start thinking too short term, you're going to make stupid decisions. Like, everybody wants to get rich quick, and I've done the same thing. And that is where you're going to get messed up, because you see the money come in and then you're like, oh, I'm making so much money, I'm just going to keep sizing up. I have so much confidence, I'm never going to lose a trade. And then boom, one trade wipes out everything because you don't understand what you're actually doing. And you don't have a plan behind the trades. So you're getting lucky maybe, and then you end up just blowing things because you don't have a plan, and then you hope that something's going to reverse, but it doesn't end up doing that. So all that does is just create bad habits, right? That's also another thing. Anytime you don't stick to your plan, or you don't have discipline, and you don't even make a plan, all that does is create bad habits. And over a long period of time, bad habits are just going to compound. It's the same thing like good habits, right? Good habits compound, bad habits compound. The more times you make a mistake, the more times you're going to continue to do the same thing, right? So if you're able to break the cycle of mistakes earlier on, it's going to be a lot easier to break that cycle rather than later on, right? And you probably have seen that multiple times. Maybe a few of you have blown accounts, maybe you haven't, I don't know. But if you have blown an account, you probably know that the next time you blew an account, it was probably because the same thing that you did was like the thing that blew your account, right? Whether it be averaging down, whether it be not having a plan, holding your trades for too long and praying that it will come back, not taking your stop loss, things like that. Whatever it is, it was probably the same thing that cost you the first account, that cost you the second account, and that will probably cost you the third and the fourth and the fifth, until you finally decide enough is enough and I need to stop being an idiot, and I actually want to make money over the long term. And the only way to do that is to not be stupid and stick to my plan. I would rather stick to my plan and get stopped out and then the stock comes back up, rather than having like not stuck to the plan and then the stock ends up coming all the way back down, and I get like a 90% loss, because that builds good habits, right? So even if it doesn't end up going my way and I stop out and the stock literally reverses and then ends up making money, I'm still happy with myself that I was able to stick to my plan. And then all you have to do after that is just journal and then see why that ended up happening. What could you have done different? Did you have a little bit of a bad entry? Was your stop at the right place? That's things that you could do after the trade. But when you're in the trade, it really is important to take the stop loss, because how many of you wish that you could have done something different while you were in a trade? Probably everybody, right? But the thing is, you aren't able to do that. You aren't able to do something different after the trade is actually over. The only thing you're able to do is while you're actually in the trade is when you're able to make those little changes and stuff like that. After the trade is over, that's when you can journal. That's when you can see what went wrong, things like that. And that's something I always recommend to do as well. So make sure you are thinking about risk management at all times, because this really hits home. Because again, I've been in the same position, which is why I always try to like encourage everybody to take these steps, because I know that this is what's holding you back, because it's held me back in the past, right? And once I got over this this aspect of my trading just completely evolved. Like, that is really when my my trading like actually became consistently profitable. Like I was making money, but then I would lose money. But whenever I realized that I just have to stick to my plan is profitable, I have confidence in it, and I just need to think about the long term, that is when I ended up making the most money and was able to be consistent for a long period of time, which is super important because consistency is really all that matters at the end of the day. Because a big home run, getting rich quick, is not really going to do much for you because you're either going to end up losing that money in the grand scheme of things, or like you won't have an active source of income to be able to live off that money, right? So if you have the skill of trading, you'll be able to make money literally the rest of your life, just using the same exact strategy, using the same exact setups, repeating the process over and over and over again. You'll literally be set for life if you just keep rinsing the same setups and things like that, as long as obviously the markets allow for that. So that's why the skill is more important than the money, especially right in the beginning. That's the most important thing. So always focus on the skill. Make sure that you have a plan, please. So let's get more in depth on this. Creating a strict set of rules and guidelines to follow while trading keeps your risk management in check. So you need to respect price, you need to respect important levels, and utilizing moving averages is a great way to do it. But you need to know how your plan looks like. So for example, let's say on this UPST trade that I entered, I always give you guys an idea of what my stop loss is, what my targets are, and obviously you know my entry. So you have the three things to look for, right? But understand why that happened, right? So go through the trade reviews, or whenever I explain it during the live, understand why I'm getting into these trades and see what's going on, right? And kind of like add that to your own plan. So for example, on UPSC, my entry was right here. The reason why is because it was breaking out of this 5-minute base, and we had the daily breakout that was happening, right? So not even more so technicals, just the fact that I had a plan for my entry is one of the most important things, because you will know where you want to get, where you want to enter, but then you won't follow that plan, right? So only take an entry if you have a plan for that entry. Do not just randomly take a stock up here, because you're either going to be one, chasing, or two, you don't know where to manage your risk. Like that's not a high probability trade. So if you have the trade planned out, like here, for example, then you know where you need to enter, and then you know where your stop loss could be and where your targets could be. So let's say, for example, my entry was right here. My stop loss was a low of day, right? Actually, I think I took my entry a little bit below that spot. Took it like right here on the first breakout. That was the entry, right? So what I'm looking for is big targets on the like daily, for example, big resistance levels, right? So my first target was like right up here into $81. The reason why is because this is a big resistance level up here, right? So your targets need to make sense in terms of risk to reward. And what I mean by that is you can't be having a huge loss on your like stop loss and a really small win on your first trim. It needs to be at least over a 1R. I like to keep it like at least to like a 1.5R. And what I mean by that is, let's set up this chart so I could show you guys. Yeah, so long position, let's say our entry is right here. We're risking this low, right? Our first TP is here. That's at least a 1RR, right? And that's usually not even like my favorite look on these. Usually I like to go for at least like a 2RR before I take my first trim. But the reason why this is so important is because risk reward tells you the profitability of your strategy. Because if you're risking, let's say, all the way down here, and this is your first target, imagine if you do that over like a long period of time, your winners are going to be this big and your losers are going to be this big, right? It just doesn't make sense. So your winners have to be at least a 1R over your losers, right? So you can see here we have a 1R. Again, usually I like to go 1.5 or 2. So this would even be like a bad example of like a really good RR. Usually I like to go for a lot better risk reward. So how do we do that? We have to get good entries, because the higher we get the entry, the worse our RR is, right? Compared to the stop for low of day. If we take an entry here, for example, then maybe it makes sense that we move our stop up, right? And then we move our target up. So you have to understand there has to be a different type of trade plan that you need to set up depending on where you take the entry. And that's why it's always important to have good entries. Because if you don't have a good entry, you're gonna have a bad trade. Like the setup for the trade is gonna be bad because you don't have a high probability trade because you don't have a key level to trade against. That's why I usually like to use low of day, especially for breakouts, because as long as the stock holds low of day, it's probably going to move in the direction of the move that it's making, right? Especially as it's breaking out. So that's why low of day stop for me usually works really well. And I usually like to use it on breakouts. But the thing is, for example, if the stock is all the way up here, you can't use low of day stop because low of day stop would literally be like a huge loss on the contracts, right? Unless you take like a lot of time and then you look for something up here for your first target, but that's going to be a completely different type of trade. So you have to understand that setting up your trade and having the plan, you also need to make sense. Like the plan needs to make sense, right? We can't just be taking like a trade here at the highs and then targeting some random level. We have to look at price levels, and the closer we are on the trade to a key level, the better the profitability on that trade is going to be. So the closer you are to a key level when taking the entry, the better, right? So for example, if we're taking breakouts, the closer we are to the breakout level, the better, because we know that, for example, if we break under the breakout level, it's probably going to be a failed breakout and price will move back down. So if we take an entry here, that might be too far away, right? If we take an entry closer, that's going to give us a better risk to reward because we risk these lows and we can potentially target up into these highs. So the closer we are to the breakout level or any key level in general, for example, if you want to try to take a bottom trade like off these lows, if you take it here, that's a bit too far, right? Because if you put your stop loss here, that doesn't really make sense. So you want to take it as close as you can to this low, because then that will set up for a good risk to reward trade. So you got to have that planned out before taking the trade. Again, my plan is always going to be public to you guys when I do the alerts, because you'll see what my stop is, you'll see what my entry is, and you'll see what my targets are. So if you know that, you know the plan. But you also need to have a plan for your own trades if you have different size, because if you have different type of size and you don't, let's say, have enough contracts to hold for like trims and stuff like that, then you need to have a different plan. And the reason for that is because the trade is going to be set up completely different. The way I set up my trades, and you could see this in the rules that I have for like under Sean rules, is I set them up to be quarterly trades. So what I mean by that is every target that I hit, I'll trim in quarters. So I have 3 targets. After the 3rd target, once I'm done with 75% of my trims, I'm going to be setting up runners, and then I'm going to be putting the stop to either break even or I'm going to put a trailing stop, whatever works the best. And the reason why I do that is because I've back tested my strategy and I've developed a understanding for the fact that this is the best way for me to be able to hold my winners, because I'm also able to take some profits into first targets, but then as long as the stock holds and it doesn't stop me out, I'm able to hold the stock and hold the winners and hit like new targets, right? But if you can't do that, and let's say you only have one contract, the trade has to be completely different. And the reason for that is because, again, you can't have that 1R principle. Because, for example, if we are trading with more than one contract, we have the ability to take first trim here, for example, and then second trim here. So that allows me to have a way higher profitability margin. But if you take, for example, the first trim here with one contract, then you don't have a position anymore. So then if you take a loss, then you're basically going to be down like 20%, but your win's only 20%, right? And that doesn't make sense, because think about it from a number standpoint. If you lose 20%, you need to make 40% to make that 20% that you lost back, right? To go to break even. So that's how it works. So your winner has to be at least double what your loser is if you have one contract, and you have to set up that trade plan correctly as well. So this is just a little bit more in depth in terms of like setting up trade plans with like charts and stuff like that. I have a whole video on this as well in the psychology section under resources. So it'll go a little bit more in depth there. I don't want to take up too much time with this because we did like a whole thing on that. But the reason why I want you guys to set this up and understand these setups with the charts is because you need to understand your risk to reward in the markets, right? Because that's what makes you profitable. If you're just taking random stuff and you're not understanding like why you're risking this level and why you're taking profits at that level, then you won't be profitable over a long period of time. So that's going to help you hold your runners for a while because you understand the plan that you have for these trades, right? So you need to create that plan. Even if you don't want to go that much in detail, for example, you need to have a plan, right? So know where you're gonna enter, know where you're gonna stop out, and then know where you're going to take profits. That's the three things you should at least have when you're first getting into a trade. So make sure you know that. You want to enter each and every trade with a game plan. When the market opens, you should already have a list of stocks you're going to be trading at certain levels. Depending on the price action you observe, by doing this, you're able to react to what the market is providing you rather than searching for opportunities. And also, you're not going to really be panicking and having FOMO because you already planned everything out. So if you know exactly where you're going to be taking a trade, it's going to be much easier to execute on it because you don't need to continue to look for it and second guess yourself and stuff like that. You already know where the entry is going to be. So it should be a lot easier to execute. So yeah, just make sure you keep that in mind. You need to have a plan, and that all comes down to risk management because a plan will basically set up your risk management, right? And you also need to have an idea of how you're going to be sizing your trades. You can't just be taking like 50% of your account on every trade because if one trade goes bad, you're going to blow up your account. So that makes no sense. Try to keep it to a certain percentage that makes sense. I would say for smaller accounts, if you're really struggling with getting into like option contracts, try to make it so that you can at least buy 2 or 3 contracts because buying one contract is going to be very, very hard to manage, especially like over the long term. But if let's say for example, the contracts are too expensive for you to be able to buy 2 or 3 contracts, then I would either avoid taking that trade or you can look for substitutes for like cheaper contracts or just wait for the next trade that has cheaper contracts on it. Because again, not having enough contracts in the trade is going to be hard to manage the trade. If you have an account that's like way small, that is like impossible for you to take anything over like one contract, then that's fine. You just have to understand that you need to have a different plan for your trades. Obviously, you can continue to follow the way that I trade, but probably taking like profits at the first target when I trim is probably not the best way to go about it. Because you need to set up a different type of plan. But I don't want to mix you guys up and kind of make it too hard to understand. The best thing we do is just keep it super, super simple. But if you have a plan, it's going to make it much easier to manage your risk. Do not be greedy. You're going to have red days, but the whole goal is to keep the red days very small. Keep your winners big. If you see what I personally do, my winners end up being like 300, 400, 500% wins, right? And yes, that's going to be mostly on runners, but that's still holding your winners for a long time, right? And my losers are going to probably be around like 20, 30%, sometimes at the maximum like 40%. It's going to be like my biggest loss if I have smaller size. But that's the difference between the percentage is like night and day, right? And if you're able to have like 400, 500% winners throughout the month, and keep your losers small, you're just going to make money. That's just statistics. So you have to make sure that you're holding the winners for a long period of time. A lot of you are literally seeing me take like trims on positions I took like 3 weeks ago, right? But then nobody's holding those with me. So it doesn't make sense. Like if you want to be swing trading, you have to swing the trades, right? We're not day trading. If you're swing trading, you have to be able to hold those contracts for a long period of time. And that's all just off the fact that we're in profit. We set our stop to break even to manage our risk. And then as long as the stock holds, we're able to hold the runners and the winners for a long period of time. So that's swing trading. If you're looking at day trade, then that's a completely different topic, right? Swing trading, you're able to hold your runners a lot more easily because you can just not look at the trade. Say your stops at break even, set your alerts at targets that you're looking at for like continuous targets, and then you're able to catch those big moves to the upside. That makes sense. So yeah, you need to be able to hold your winners for a long period of time. And again, that's all going to come with time. I'm not expecting everybody to be able to do this right off the bat, but I do want to help you guys understand that there's going to be drawdown in trading. You're going to be red on some stocks, but like think about it, right? What is dreading about a stock being down going to do for you, right? Like a lot of people get into a stock, they're down 5% and they're like, are you looking at this stock? It's going down. Like, okay, it's going down. Is our plan still in place? Is our stop loss still in the right level? If it is, then we just follow the plan. Like, what are we going to be able to do about it realistically? Like, guys, we're not going to be able to buy the stock up, right? Like, we're not market makers. So the stock's going to move regardless of what you do. But it's about sticking to the plan that you have that matters, because other than that, there's nothing you could do. If you set your plan the right way and you know your strategy works and you have confidence in the trade, you have to let the trade play out. If you get stopped out, you get stopped out. You lose money. It is what it is. But we all know, or we all should know, that in the long term, we end up making money because our strategy works. And if you're confident in your strategy, this is how this ends up going in the markets, right? Because again, you're going to have losses. It's literally a part of the process. Nobody has a 100% win rate. You could have a high percent win rate, like 80%. Even then, that's really, really high. But if you have an 80% win rate, you're still losing 20% of the time, right? And there's nothing you could do about it. The only thing you could do about it is keep it small. And that's why, again, you cut your losers right away. Some of you wonder why I cut losers when I have like a 1 to 2 months out on it. It's because I have good habits, and this is things that I've learned. So even if I have a 1 to 2 months out, I still don't want to be in a trade that's going against my plan, right? Because in the long term, I know that maybe it'll end up going up, but most of the time, those trades end up hurting me more than they do good if I end up holding them. So the best thing you could do is stick to your plan, close those trades out when they don't work for you. When your stop gets hit, when your stops get hit, make sure that you adhere to your stop losses and that you follow your plan and that you don't make stupid mistakes, keep moving your stop losses down, do stupid stuff like that. Because there's nothing you could do about what price, how price is moving, right? The only thing you could do is follow your plan and click sell, click buy. And again, something that a lot of people will do is they'll sell when they're down literally like 2 to 5% and they don't let the trade play out, and then they're taking a bunch of paper cuts. Like, that's another thing that's also very, very big, right? If your risk is 5% and that's how you plan the trade, then that's a different story. But if you have a stop at a certain level and you take it before the stop gets hit, that's also not a good way to trade, because then you're not trading your system, right? So just keep that in mind. That's something that's really important as well. Same thing with winners, right? Like, if you're going to be taking winners off too early, then that's also a bad thing to do, because then you're not sticking to your targets. So there's like both sides of that that you need to understand. Having a plan and then sticking to it is the best way to trade, because that makes it systematic, and that's what good trading is. Good trading is like repeatable, systematic trading that's backed by good data and longevity, right? Which usually leads to consistency, which will lead to longevity. So like they correlate to each other. But yeah, right. So you need to make sure that that if you have a plan for the trade, you're sticking to the plan. And also, don't be greedy when your targets are hit, because a lot of people have their targets hit. For example, stock hits resistance, but they don't take profit. That's another thing, right? So like, if your stock hits profit target, take profit, set stop to break even. Manage your risk. The first thing you should be thinking before literally every single morning is not how I'm going to make money, is how I'm going to manage my risk to make sure that I don't lose money. Because the money will come as long as your risk is managed. Because again, our strategy works, and we know over a long period of time, we're going to be making money, especially when the market allows for these really strong moves, which it is right now, right? So we want to take advantage of the strong moves that are happening in the market, but we also don't want to wipe out all our gains in one trade by making stupid mistakes. Because again, we know we're not going to win every single trade. Sometimes it's going to go bad. It just is what it is. But yeah, you need to be able to do that. And I'll go over these really quickly. This isn't too important, but the success comes from getting the job done. So what I mean by that is you just have to show up every single day and do the same thing. So like, again, there's no secret sauce. It's all just consistent work and a lot of effort. you need to find the right strategy that works for you. And this is important because I know a lot of you probably follow what I do. But if I'm being 100% honest, some people just don't work with some certain strategies, right? Like there's traders out there who will do better with day trading, for example, versus swing trading just because their personality is different. So like psychologically, it might be easier for them to day trade rather than swing trade. Again, I personally recommend swing trading and my strategy because the best traders in the world trade this strategy. And I know for like a fact for all the data that I've collected and all the strategies that I've went through myself personally, this is going to be statistically the best strategy. But again, for some people, it might not work just based off the fact that it doesn't match their personality. So you need to find the one that works for you. We have a bunch of different strategies from traders in the Discord, like Ryan, for example, he trades like SPX, right? Even though it's something I would never recommend to anybody, honestly, like I don't know a single profitable trader that just trades SPX USDT. Ryan might be the only one. So I wouldn't recommend it, but again, if that matches your criteria and that's something that you like to trade and you're seeing profitability there, then I'm gonna say go all in on that, right? So you have to find the strategy that works for you and the one that works for your personality, because everyone has different personality traits and different psychology and stuff like that. So yeah, when you're first starting out though, always start off small. That's a super important thing. And then this is gonna be probably the second most important thing. Understand that losses happen and you don't need to make the loss up right away, because a lot of people will lose like 10% or 20%. Like they'll stick to their plan and they'll do everything exactly perfect, but then they'll size up the next trade because they want to make up the trade. And then they'll end up oversizing, and then they'll end up going on tilt, and then they'll end up blowing up their account. So just understand that you don't need to make up the loss in one trade, right? Sometimes it'll take you 2 or 3 trades or even 4 trades to make up a loss. And that's fine, because we know, again, over a long period of time, our strategy will work. So sometimes you might have a big loss. Sometimes big losses are unavoidable. Let's say you had a bunch of size, or you had like full size trade in the overnight, and you have some crazy news that comes out that there's nothing you could do about, then you take a big loss. All right, I took a big loss. It's not the end of the world. There's not right? Like I still have my account, as long as I didn't blow up my account and I sized correctly overnight and I didn't risk my whole account on one swing, then I'm fine. I don't need to make everything back in one trade. I can literally make it back throughout the week, and then I'll just be break even on the week. Worst comes to worst, right? Or I'll be a little bit red on the week. That's fine. Like your week might be red. Like there's weeks that are red. There's months that are red. There's people who have red months, right? I had a red month in September. I had a red month. So it happens, right? And that was my only red month of the year. But guess what? That red month, I was literally down less than every other single month this month for like how much I was up. So for example, I was down 30,000 on that month, but 30,000 is like my smallest winning month this year. So like I kept it so small to the point where the winning months or like double that one losing month that I had. So again, it's fine to have that losing month. Just make sure that it's small. You keep it small, and that you don't do anything too crazy, and you don't have to make it back right away, because again, it does happen that you will be red. So consistency and long term is all that matters. So a lot of people had a really good 3 to 4 weeks, or had a really good last week, or had a really good 2 weeks, whatever. If you had a good month, or if you made a lot of money over the last few weeks because market has been allowing for some really good moves, just take it slower at this point. Like you have to understand, right? You don't have to be in a trade every single day for starters. And sometimes you don't have to make a bunch of money either. You could size down a little bit, and you can kind of take a little bit of a breath, see what the market does. We had some pretty crazy price action today. We don't have to be all in whenever the market's kind of consolidating a little bit and stuff like that. That's also something to take note of and pay attention to, right? So again, you don't want to dig yourself a hole. Like there's 250 trading days. If you try to size up too fast to make up for your losses, you're going to blow up your account. So if you take it slow, it allows you to enjoy the process, and you're able to take it slow and make consistent money, which is the most important goal. So yeah, know your personality, keep things simple, right? We want to keep things super simple. That's why the strategy that I use is simple. Execution first, right? You don't want to look for money. A really good tip that I have is, if you're able to do this on your broker, just take off the P&L and just put percentages for your profit and loss. So like only see the profit and loss with percentage rather than the gain, because that's going to keep you less emotional. If you see you're down like 200% versus seeing you're down 10% or whatever the percentage matches up for your account, there's going to be a big difference to that, right? And then you can look in terms of percentages to when to take your profits and stuff like that. Obviously, you want to take them at your targets on the charts, but if you're down like 20%, for example, you're going to have way less of an emotional bearing. Let's say, for example, if you're down like $1,000 or something like that, it's going to be like a lot less on your emotions, and it's going to help you follow the plan. Same thing with being up $1,000. So that's a really good tip. And yeah, you need to develop a strong mindset. You think like a person who trades for a living, right? Don't think about what can come, because like obviously everyone thinks about like all the cool shit that you can get if you start making money consistently or whatever. Think about where you could lose, right? That should be the one thing that you go into the day thinking about. Obviously, don't keep it to the point where it's not like you're not able to execute because you're really scared of losing, but be smart about it, right? Like think about what you could lose. You could lose $5,000. That might be like a whole month of hard work, right? That you put in. So there's no reason to do that. Like, why do you want to waste a month of your life working and then losing it all in one trade? That just makes no sense. You need to have respect for your money and be in the best probability trades. And the way to do that is to not overtrade, to be disciplined and stick to the setups that you know you should be taking. And then again, putting the time in to learn which setups are even the ones worth taking, right? Some of you don't even put the time into to learn that. And there's so many resources again in the Discord. Myself, right? I answer almost every single DM. I try to get to everybody. There's a bunch of them, but even like in questions channel or in stock talk, I answer everybody. So you can use that as a resource. If you're struggling, shoot me a message or put the message in the Discord, and I'll always try to help out. These streams are always going to be really good as well, right? So, yeah, just keep that in mind. But yeah, that's going to be like a little bit of a recap on that. I know a lot of you have a bunch of questions, so I'll get to all your guys' questions, and then hopefully that helps out. Advice on trimming profits, letting runners run versus when to fully close runners. I was hoping Tesla would reverse today and let it eat into my profits. I rolled up a few days ago, and those went negative fast. So if you have runners, right? If you have runners, the whole point of runners is to capture the continuation of the move. But the point is not to let your trade go red. So what I do, if I am taking runners, what I do is just put them at break even, right? The moment I'm in profit, or let's say if I'm up like 25% in the very least, you have to put the stop up to break even, because if you don't, it just doesn't make sense, because it's not a runner at that point. If it's a position, then that's a different thing. Runners, the whole point and the goal of runners is to have the stop at break even, and then they run if the market allows for it, or if the stock allows for it. But then if they come back down, then you get stopped out at break even. So runners, you should have that mindset for it. If you didn't take any trim on Tesla in the open, I didn't take a trim either. But what I did was set my stop to break even, because the stock was rejecting a big level, right? And I don't want to let it go red. Like on Friday, we were up 40% on it. Why would I want to go red, right? Like I already took my trim. I already took a little bit of profits. What's the point of letting the stock go red after we took a trim on it? So like, this is why on my rules, you could see that I always say after you take a first trim, after you lock in your first profits, always put the stop up to break even, because then at least you lock in a little bit of profits, but you don't let the trade go red, right? Because if the trade goes red, you lose all those profits that you locked in, and then you end up going red anyways. So that's even like a bigger loss, because you lose the profits, and then if price continues to the downside, you're going to be even in a bigger loss. So just understand that you have to put the stop up to break even, and that's why I always do that. And if you didn't take a trim, you just have to follow your stop loss. And if you're cool with holding, with going green to red, that's up to you. Just make sure you follow your stop loss after that. So, okay, yeah. Also, don't, like, there's a difference between wanting good RR and then wanting RR that makes sense, right? So, like, if you enter this, for example, your stop loss shouldn't be literally right here. That makes no sense. So even though this is like I don't even know, I can't even see the RR. It's probably like over 20 or something crazy. This doesn't make sense, right? So you need to set something up that makes sense with the chart, right? So how we do that is, let's say this is going to be our entry on UPST. I usually like to use low of day stop because it's very close to where price is on the breakout that I take usually. But let's say if low of day is all the way down here, then I can't use it. So for example, today on Mara, some of you are asking me why I didn't use low of day stop. My entry was up here when we broke out of this above this high of day right here. But look at where low of day is, right? Like, it's literally all the way down here. So this is way, way, way too big of a risk, because at that point the contracts are literally down like 50 or 60%. Like, that's way too much risk. So I'm not able to put the stop there. So you need to find a stop level that makes sense, which is why I put it right here at 26.5, which would have been where the breakout happened, right? Like, this is where the first big move happened on the 5-minute candle, 15-minute candle. So that would have been where I was looking for this to move up. And then that's my stop, that's my risk, and then my target was 30. So that's an RR that makes sense, and that's about like 4 RR. But it's something that makes sense, right? So just keep that in mind. You trim 1/4 at the first level. So I like to trim like in quarters. So I like to go quarter at TP1, quarter at TP2, quarter at TP3, and then have a quarter for runners. And the runners I usually won't take off at a certain like target. What I'll do is just trail them and then just let the stock run, because if it wants to continue to move higher, I'm fine with having the exposure to it, and then that will help you catch those big wins. When you trim along the way, yeah, it will mess up the overall RR. And that's why I always say for the first trim, at least have double what your loser is going to be, because then that's always a guaranteed 2 RR, even if your first trim is even if you're trimming along the way. So that's a way to like avoid that. Sold UPSC at 5.6 on the dip, but I made some money back when it went back up, but still lost overall. Yeah, so like, again, there was no reason to sell it at the low. Like, that was literally the low of day. Because as long as it was above the breakout level, which was right here, the trade is still valid. So that's just not a good place to stop out. So you might have stopped out because you were a bit scared. But the place where it makes sense to stop out would be here, right, on the chart, because this is where the breakout started. So as long as it holds here, the breakout's probably going to continue. Sizing another area which isn't clear. I sized light for winners and heavy for losers. Stuck to stop loss, but loss was high. I mean, sometimes you'll have times when you can't really control that, for example, because you don't know what to size in big for. What I usually do is just whenever I'm confident in the trade, that's when I size the biggest. So those are usually the trades that end up working out the best for me, the ones that I have the most confidence in. So like if you're super confident in the trade playing out, then that's when I would size up. But if you're not that confident, you could take half size, which is something that I do. But if you're following my trades, there's always going to be a size guide on it. So anything that is not saying half size. So like, let me show you guys this. So let's go through the alerts. Anything that doesn't say half size, right, it's going to be full. So for example, this trade that I took on UPST, it was full size. So it's going to be my normal full size. And if you go all the way down to like the rules channel, you could see the guide for that. That's about 5% of the account, right? So that's usually what I take. 3 to 5%. Obviously, I say 3 to 5 because I can't nail down like one specific thing on it because it's always going to fluctuate a little bit. But it's about 5%. So that's my full size. If I say half size, then half of 5% is 2.5%, right? Because it's a little bit riskier. So for example, the Mara trade was half size. So even though I took like a 30% loss on Mara, it was half size. So the UPST trade was making up for it by like 10 like twofold, right? Because it was double the size. So you can always see the sizing guide for this. Same thing with like, if we go up here, let's see. So yeah, Tesla full size, right? And then trimmed, and then took profits on it. So you can kind of see the sizing on everything. Carvana full size, right? No sizing guide on it, full size. SMR half size. So you can see exactly what size I'm taking. For example, Square half size, or sorry, full size. SMR very light, so that would be like 1%. Light usually means 1%. Light would be like the smallest size possible. But again, it's really hard to follow this exact like blueprint if you don't have your own rules for your sizing. So that's what I always recommend to do. I would say probably like 80% of the time though, the trades that I'm taking are like are full size, right? Like I only really do half size like maybe once or twice a week on trades. So like most of the time they're going to be full anyways. So that would be the sizing to take. Like 5% is going to be your size. But if it looks like you're taking like bigger losers in terms of like the size, just try to get into stocks that you're really high confident in. That makes sense. How do you trim on drawdowns? You have a single stop loss for the trade. Yeah. So like if I have a stop loss, I take it off complete. Like I take the full position off. Like I wouldn't trim out of the trade, right? Like I don't take like 50% off and then take 50% off lower. Stuff like that. 30 to 40% losses on full position, but the winners at 300 to 400% are only 1/4 of the position that are still that positive. Yeah, bro. And also like 30 to 40% is going to be like my max loss, right? So most of the time my losers are like 20%. So keep that in mind. But yes, because literally the first trim is going to be at 80%, right? If my max loss is 30, my first trim is going to be at 60. So already the first trim makes that RR make sense. How do I approach position sizing? For example, if you're managing an account of 25K, what would you position be and how would you trim in case of profit? So same thing that I do. You just do 5% of your account. So if you're using 25K, 5% of your account per position is pretty safe. So that'd be about like, I think $1,250 if I'm doing the math correctly. If you want to size a little bit like more aggressively and you have the confidence, 10% could work. I've seen that work for a few people, but that's a lot of size still. So it's just you have to see what works best for you also. And the trims would be the same thing. I would take 1/4 and then 1/4, 1/4, 1/4. And this doc right here is actually straight from our book. So if you want to check this out, it's just at the end. Yeah, I'm going to be trading the 10K account, but you could clearly see like we haven't really had any great setups for cheaper stocks. So haven't really wanted to trade on that yet. Why you trade mostly calls and don't take many puts? Very simply because the market is designed to go up, and the upside is usually where the most money is made over a long period of time. Obviously, you can scalp puts and stuff like that, but when the market is trending higher, usually money is made to the upside. And because I'm a long base trader and I'm a momentum based trader, so I will take shorts, but only when the market is trending lower, because I want to be within the trend of the market, because that sets up for higher probability trades. Yeah, if a stock goes down after hours and you have options, there's nothing you could do. It'll just open up the next morning, and if it hits your stop, it'll execute. So yeah, just keep that in mind. That's why you don't want to size like 20% of your account in one trade, because again, you can't manage it overnight. So that's why usually my max size is 5% of my account, because um, the worst comes to worst, and if the contract goes to zero, I lose 5% of my account, but I don't lose all of it. Like I don't lose like 20%, which is a very big amount. This is a good question. When do you decide to chase a trade that's clearly ripping versus just sitting on your hands? Great question, and honestly, something that I probably still kind of have a little bit of like an internal, um, what's the word I'm looking for? I don't know, like a quandary in my head sometimes. So like I'll see a stock breaking out, and then it looks like it's really pushing with momentum. For example, HIMS, this one, and it's probably going to continue to move higher. And you don't know if it's going to pull back or if it continues to move higher, and you don't know if you're chasing it or if it's going to, pull back. But what I look for and the kind of sweet spot that I found for this is most of the time it's better to wait for a pullback. But for example, on HIMS, this one was clearly not going to give us a pullback. You could just tell by the way it was trading like on the smaller time frames. So instead of chasing it here, we could just wait for a 5-minute continuation pattern. So this would be, or like 15-minute continuation pattern. So this would be kind of where I entered today on HIMS. So since I missed the first breakout, this was the level that made sense to me. And then you could see it had that continuation to the upside. So waiting for 15 and 5-minute or 1 hour consolidations is the best way to go about it. Because the stock is 100% going to break to pull back on the smaller time frames, because like on the 1 minute it can't just continue to go up, right? So like it'll do something like this, but then something like this, but then it will pull back and then set up, right? So we want to take the next impulsive move higher because we have somewhere to risk. If we just take it here, then our risk would probably be somewhere here, but that doesn't really make sense because that's way too far away. But if we take it here, for example, we can risk this low, we can risk this low, we can risk this low. So it makes a lot more sense for like a risk to reward standpoint. And we also know that there's a better chance that it will continue higher because we have this 15-minute pattern that's set up to push higher. And then a lot of the times you just want to be patient though. Like sometimes you'll miss the stock, and it's probably better to just miss it than chase at the highs. If there's no 15-minute continuation pattern, I'll just skip out on it. Or let's say, for example, if it rips and then the pattern is setting up way too far away from where the actual breakout happened, probably skip out on it because there's so many setups in the market that there's no reason to chase things. But that's a really good question because sometimes I'll look at a stock and I'll be like, is it worth it? The answer would be, as long as you're close to the breakout level and you're setting up a continuation pattern on the smaller time frames, yes. If not, wait for retest. If the retest doesn't come, just go to a different stock. Like it is what it is. This one stock's probably not going to change your life. If it does, I'm sorry for giving you that advice, but it probably won't. And there's a lot of other setups that will play out like this. So yeah, you just have to be confident that there's going to be other setups that will work. Well, when I post a trade, for example, you definitely don't want to trade up 20% because that's sometimes where I take like my first target, right? So make sure you keep that in mind. But if the discrepancy is like 5%, for example, so like let's say I get in at like let's say UPST is like 6.4 and the contract's sitting at 6.5, that 10-cent spread is not going to make a huge difference. But if it's like sitting at like $7, for example, then yeah, it's already up 10%. Probably don't get in. But with a lot of these positions, you could just set a limit, right? So like for example, if you miss the first fill, which I took the trade like right here somewhere, it did end up coming down a pretty good amount. I think it was down like 8% at one point. So you probably would have gotten a better fill. Or if you would have just set the fill, like say for example you missed it and it popped a little bit, you could have just set the fill at my fill and then you would have ended up getting filled. So a lot of the times that does end up happening. Sometimes it won't. That's just the name of the game. But yeah. Can I show cost as an example? What would be good entry and stop loss when targeting 980,000 as price target, assuming we took this trade on Friday for 1,000 call 1220? Yeah. So cost. What I would use for this one is probably I would have used 958. Like if you got in on Friday, I definitely would have used 958 as a stop loss. But at this point, if you're still in, you could use the ADMA. That's usually the best place to risk because you could see that's where the big moves kind of happen for like a trendy stock. For example, here, this one popped off that spot, kind of held there. So that would be the level to watch. Entered Tesla late on Friday, so didn't have any profits until this morning. Based on what you're saying after the gap up, even if I didn't take a trim, then I should have probably be setting my stop at break even. I ended up using the stop I had planned, but went up from about 25, 30 at open to finishing down 43%. Yeah, so that stop just didn't make sense. That was way too low. Like, there's no reason for you to be down 43%. That's way too like much risk. So you should have probably used a different stop loss, kept it a little bit tighter, or took profit at the open. But I don't think I would have set that stop at break even. So to answer your question, if you entered like late on Friday and you didn't have any profits at all, you didn't take any trim, I don't think I honestly would have set stop at break even if I didn't trim. If I trimmed, I would have, but if I didn't trim, I wouldn't. And I would say your mistake was probably just not trimming because it hit this level of resistance right here. Like that's gonna be your first target. Like there's no other place for it to go from here, right? Like that's clearly first target. So the trade has to make sense. And if you took it here, for example, into the close on Friday, this has to be your first target. And then this would probably have to be your stop, either this low right here or this low, because this is still a really good risk reward trade. Because at this point, if you were to set this up like this, so let's say you got long here, your stop was right there, that's still a good trade. Like that's a 2.5 RR. And even if you had the stop down here, that's still a 1.4. So that makes sense, but your stop is probably somewhere closer to down here, which is at that point just doesn't really make sense. Like that's too much risk. Your first target would have to be all the way up here at like 370, which is like way too far out. So this was clearly the first level to target. So you just have to understand, like you have to find where the big levels are. And even though, let's say for example, 25 to 30% might not be that much, if you're hitting a big level of resistance, there's no point to like, you can think that the stock probably goes up, but it's a big level of resistance. So you have to take profits there, right? That's why the trade plan has to make sense. So you might want more, but the stock is at this level of resistance right here that left this like huge wick over. So this was clearly going to be a big level for price to get over. You get what I'm saying? If that makes sense. What's my average R return per trade? That's a good question. Let's check my journaling app. I could tell you exactly what it is. So for the year, my profit factor is 3.13. So my average RR is over 3, which is honestly really good, I think. Um, see how much it is this month, because I think this month I actually even had a better RR. So this month my RR was 4. Yeah, so it was even better this month. What if low of day is only 15 to 20% away from where you get in? Is there not a risk of a paper cut because the risk is too small? No. So the most important thing is that your stop level is a level that makes sense. Low of day is usually a great level for breakouts because, again, if a stock is breaking out and it doesn't hold low of day, like down here, it's not breaking out. Like it's literally just in a failed breakout. So you could even keep it tighter. Like having a tight stop is not a bad thing to do at all. I say 30 to 40% like is your max loss, but like usually the tighter it is, the better. So like it's good to cut your losers quickly, if anything. Like it's better than to hold them, um, and give them too much room. Right. The only time I would give the stock more room is when I have small size on it because there's not like a lot of risk in terms of like the money capital on that trade. But usually you want to keep it really tight. The tighter it is, the better. Um, I'm confused about what you asked on the last question. Historic price action giving an edge. Can I elaborate more on that? Can you explain like the question a little bit better? Can I explain why I took UBSC after I had already gapped up above your trigger 74.84 and did not retest this level? What was your conviction behind it? It did retest it. So it gapped, right? This was open. It retested, and then it reclaimed, and then it held again on the retest right here. So when I saw that, I was looking for this range that was setting up, and then I ended up taking the entry like somewhere up here. So this one did actually retest. I think it's the only one that retested from the focus list. Can I explain how I use moving averages as stops? Yeah, basically just look at the daily time frame and then see where the ADMA is. So for example, on Square, you could see we held today right at the ADMA. So from here, that's going to be my like stop loss level. If price breaks below the ADMA, then we just very simply get out, right? Usually for swings, I like to use this on like a daily closing basis, but I would have to have like some really good time on these contracts. If I don't have enough time, you could just watch the smaller time frames and see how price reacts off that level. So for example, you could see today on Square, you had a really nice hammer right off the ADMA. So it's clear that buyers were stepping in there. Regarding size, I know you base it on a percentage of your account. Is that based on projection stop loss or the cons going to 0? Example, if I have a 40K account and I want to use 2% of my account or $800, is that based on what I'm estimating my stop to be or the cons going to 0? Well, you have to be sized for 0 in terms of like how much you're taking your in terms of like the percentage that you're taking, because if you're swinging overnight, there could be like some insane news. This is not going to happen often, but it might happen like once every year or something. That's going to like have you down like 50% at the open or something crazy. So you do have to size for potentially 0 in terms of like the risk that you're taking, which is again why I max it usually out to like 5%, because worst comes to worst, I lose 5% of my account, and that's like the worst that could possibly happen, which is still bad, but it's the worst that can happen. Like I'm not losing 50% or 20% of my account, but usually in terms of the way that I set up my risk, it will be for where the stop loss is. So for example, if I'm risking 5% of my account and I have a 10K account, right? So that's going to be $500. Let's say I'm risking maximum 30% of that 5%. So 30% of that $500, that's going to be my max loss. So like about $150, right? That's how you would set up that trade. And that would be your like true risk. Yeah, if it retests the trigger, it's still a great entry, but just make sure that it holds, right? So, for example, Tesla retested the 356 level, but it just like sold right off of it. So, well, actually, it did hold here, and then it came back up to like 361, and then it sold off. So actually, this probably could have been a good place to enter, on Tesla, and that probably would have made some pretty decent money, like right off this 356 level. But yeah, usually this does these levels you can use uh if the market does cap up. But let's say if it doesn't hold the retest like it did here, for example, then I wouldn't take it. But UPST retested. That one was nice. Shop and Hims just did not give a retest. They were like too extended already after the first move. I mean, yeah, you need to trim, right? There's like this weird like thing that has kind of been trending recently that I've been seeing some traders talking about. How like you need to hold your full target to profits, like you need to follow like that specific RR. I get why that might like I get why it might make sense or like some sense from the outside, but if you study literally all the great traders, they all trim profits. So like nobody holds like their winners 100% because it's impossible to have huge winners if you just take everything off right at one level, right? So that's a different way to trade. The strategy that we trade right now, the whole goal is to hold these big winners. So if you're not trimming, you're not going to be able to hold big winners. Um, for that UPST trade, I saw that it was breaking below this the trigger level. So the trigger was right here, right? So it gapped up and then it broke below. And market was also selling off. So I was kind of looking at tech to see what it was gonna do. So when I saw tech selling off and UPST selling off right off the open, I didn't really like it. The fact that market was selling off, this was selling off, it wasn't holding trigger. But then when I saw that it reclaimed the trigger, that's a good sign for me. So I was looking for that as a potential entry. So yeah, I could have probably taken it here, like at the low. But if I miss the trigger move, usually I like to see it set up like on the smaller time frames, like the 5 minute continuation look. And then this would be like an opening range break, right? If you guys are familiar with this, where you have like the first like 30-minute range or something. This one was like an hour, but you have the first 30-minute range and then you have the breakout of the range, and that's usually where the move happens like for the rest of the day. So that's the idea that I had on that one. Yeah, you just need to have a stop loss. You won't be able to control news, like it just happens. But you need to if you have a stop, that's the one thing you can control your risk. I use the 821 and 50. Are those too short for swings? No, that's the one that those are the exact ones that I use. Do you have a high level curriculum or a roadmap for an intermediate trader to follow and learn from your journey, including your strategy? High level curriculum would just be like the book that we have. I mean, that would literally be everything they need. It's literally called the blueprint. I don't know if you've already read that, but that has literally everything about the strategy. Yeah, I don't think I would probably like have my stop at 30%, to be honest, for that Costco trade, but if you're already down like a really good amount, for example, and the ADMA is literally right there, at that point I would probably just use the ADMA. as stop loss. Um, because it's right here, right? So usually though I would stick to that 30% max loss, just to be like more in tune with your rules. Win rate, let me tell you, I think my win rate's about 70% this year, which is actually probably one of the lowest that I've had for the last 4 years, which is kind of crazy because it's my biggest year. But again, I think that's just managing trades better. And yeah, like my average loser is $2,000, so per trade, and my average winner is 8,000. So the difference between that is like crazy. I think that's where most of the money comes from. I really need to hold winners longer. I have no problem cutting losers. What is the best way to do that? When I heard you say you need to be like robots that stuck with me, I just struggle with it. So what are you doing like not to hold your winners longer? Are you cutting everything off like right away at the first target, or like what do you think the issue is? Trigger level for breakouts, just look for the last, usually the last high or just like a big level of resistance. So let's say, for example, on UPST, the reason why I took it at this high right here is because that was the high of the base, right? So this is the base low, this is the base high. If it breaks out over the spot, it's probably going to break out. Same thing with Tesla, and that level that I took for Friday's trade for that move. So like this level right here, you could see is resistance, resistance, resistance. So we know if we break over that level, that's where the breakout happens. Yeah, it is hard to hold the trade to 60 to 70% without trimming. So I would probably just like tighten up your stop a little bit. And if it seems like you're not able to hit those 60 to 70% without trimming, you can adjust it a little bit. So like either tighten up your risk a little bit, and let's say if your risk is 20%, then you only need a 40% winner, right, for your first trim. But if you still can't hit those 40 percenters with that tight of risk, then just adjust it a little bit and see what works. Like if you're up 30%, then you can start taking profits there, because that's like it's all about also trying stuff out too, right? And seeing what works the best, because a lot of that stuff comes with like experience. What I think about IONQ, I think it's pretty extended, but it's super strong. Overall, it's probably starting to top out a little bit though, I would say. How much do you trim at each target? It was just 1/4. Yeah, I see. That would be the look. Are your 82150 on the chart locked to day time frame? Um, it's a good question. I actually don't know. I don't think so. I think the period is just the 8 and 2150 for these. Yeah, I don't think they're locked to the day. Thoughts on trimming, then adding back to same cons after it dips. So just keep in mind, um, you want to be careful with buying the same contracts because that could be a wash sale. But that's why I usually roll over and take a different contract, because that doesn't qualify as a wash sale. So just keep that in mind. Do you use intraday moving averages for your stops? Yeah, I'll do that sometimes as well. Especially if the stock has a lot of momentum. Yeah, 70% win rate with the three R's is really good, actually. I have been on several other discords with analysts or egotistic maniacs and no humility. You guys are a blessing to new traders with every penny. Yeah, guys. I've been doing this for, I think the Discord's been a thing for like 3 years. But yeah, I'm super happy to help every single person. Like that's genuinely what makes me get up in the morning. And hopefully you guys could see that with the way that I approach things. Like I try to help everybody out no matter what. So I'm always here to help. That's that's what I want to make sure everybody knows. Like you guys can always reach out to me for any questions, anything like that. I'm here to help everybody out. I wish I honestly had like someone who I could ask like a bunch of questions to when I first started out. I did have a mentor-ish, but um, not so personal like I try to do with you guys. So it does help out. I moved my stop to break even after first trim, yeah. What I think of Rivian, it looks really good, actually. Thoughts on Tesla? It needs to hold the ADMA. On equity and leaps, I use like almost the same exact idea as like contracts. The only difference is I give it a little bit more room. So for example, on like 4, I took the low. I use low of day stop on the equity, so I'll still use like the similar type of ideas. Because again, if this breaks below this level, with breakout trading, it's just very simple. Like if a stock doesn't hold the breakout level, it's probably coming back down. But if it does hold, it's probably going up, right? That's why I love breakouts because they're very simple. We know that the stock is going to fail the breakout very quickly, so we know we'll be able to just take it off. But it's as long as it stays above our breakout level, it's going to move in our direction, like 80 to 70% of the time, right? So that's why I keep it very simple with the stop losses on like equity, options, things like that. If the stock fails to break out, it's probably not going to move higher. Can I do educational sessions on market seasonalities and Wyckoff phases? Yeah, sure. Let me write that down so I have some content to do. But yeah, I could do that. Do I ever trade SPY and QQQ? Yeah, I do, just not often. If we have an amazing setup on tech, for example, I will trade it. But look at how the market has been trading for the past like, what is this, like 3 months? Like there literally hasn't been anything to like trade here. So if there's a good setup, I'll definitely take it. For example, I'll give you this setup right here. I actually traded on tech. This is over a year ago though, but I remember this clearly because it had a super nice base, and I actually got long tech, and we caught this all the way up to like 448. So yeah, if the setups are there, I'll take it. Just the indexes have been trading like really choppily. SPY's been a little bit better, but tech has been pretty choppy. With BTC dropping but coin holding really well today, what are your thoughts? Dude, honestly, straight up, I would say for your mental health, crypto stocks, I would probably avoid. But if you really want thoughts on it, probably for my mental health, but also for yours, it does look pretty decent. The only thing is I hate to say that because, again, these stocks are just so like they just move so bad near the highs. They're really good when you buy them off the lows, so they give good opportunities. But off the highs, there's so much supply for some reason, and they just trade kind of like wonkily. So yeah, but if it gets set up something like this, then it could possibly break out. But I don't really even know, to be honest. which are my favorite sectors to trade or have been the most profitable? So it just depends on which themes are moving. So if like the AI, if we had the AI theme, for example, then semiconductors. Right now, it looks like growth stocks are probably going to be some of my favorite ones to trade. So it just kind of depends on which themes and stuff are popping. To consider leaving 9 to 5 for trading, what would you recommend is a safe cushion? So I'll give you the answer to that question, but let me give you first some an idea before that. So I would say to like 99% of people, I would never recommend trading as a full-time job. The reason why is because if that's your only income source, the stress and the anxiety and all the stuff that comes with it is going to make it harder to trade. And it's going to be like very, 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 very hard to make consistent money under those circumstances because of all the psychological parts that are going to be weighing down on you. But if you, for some way, mastered all that and you know that all that psychological stress doesn't really matter and you've made money in stocks for like 5 years consistently, then I would say yes. But the best way to use the market and trading options specifically to your benefit in your life is going to be to just use this as an extra source of income and to use it to like fast track your like investments in other areas of your life. Because if you're able to use the money that you're making for options from options and the market to put into like long-term investment vehicles, that is going to be the best way to eventually be able to quit your job. Like doing it the other way and doing it like trying to quit your job right away is going to slow down your process, in my opinion. So once I have like a bunch saved from long-term investments from making money on options, and then I have, let's say, a $250,000 account, then I would say that is probably safe, like a safe bet. Because with 250K, you can easily make like at least 5 to 10K a month, right? And for most people, that's way more than enough to live a really good life. If you have bigger dreams than that, you could make 50K a month on 250K. That's a pretty good like percentage amount. But you know, just realistically thinking about it long term, that would probably be how the numbers would have to line up. But yeah, obviously the goal, like, yeah, most people obviously want to trade and then they don't want to do 9 to 5. I get that, right? But a lot of people will always ask me, like, if you make so much money from trading, why do you sell a Discord, right? Or why do you have other businesses? Because why would you not want to have something that's one, safe, like money, right? With trading, you never know if you're going to lose money, you're going to be able to pay the bills, stuff like that. Even though I know long term I am profitable, there's no point to put yourself in that type of stress. And then two, have more money. Like, why would you put a limit on how much money you're going to be making? That makes no sense. So if you're able to make more money, there's no reason not to, because then you're able to use that money to trade and you're able to use that money to invest for the long term. So don't let people stop you from making more money. That makes no sense. Taxes, dude, taxes just hurt. Like with taxes, there's really not much you can do. There's a few things that you can like look into in terms of some advantages. For example, trading SPX has better tax advantages than like trading SPY, for example. But you're probably just gonna be taxed capital gains. Like there's nothing you can really do. So it's gonna hurt. The only thing I would say is definitely once you get to a point where you're making consistent money, make an LLC, trade under your LLC, and then whatever you buy for like your trading, any subscriptions I use, for example, if you have TradingView, or if you have even the Discord, you can write that off. So there's a few tax loopholes that you can do to like lower your tax bill at the end of the year, but you're probably going to end up just paying capital gains and somewhere around like 30-40%. So that's the one thing that sucks a little bit, unless you move to like Puerto Rico or something. But yeah. Yeah, you can write off the Discord monthly cost. If you have an LLC and you trade, you can write literally almost anything off. By the way, I'm not a CPA, so this is not a... Yeah, my company is an S corporation, so yeah, I have an accountant that sorts everything out. So if you are making serious money from trading, then I would probably recommend getting an accountant because you can there are a few loopholes that you can have, but if you're not making like, I would say at least 5 to 10K a month, I wouldn't really worry about it too much like yet until you get to that point. You can write off $3,000 of your losses. Like that's the most you can write off. Just an accountant. I don't really know what a tax specialist is, to be honest. But I'm like my accountant is a CPA, so he just like files all my stuff for me. Oh, they find more loopholes. Got you. All right, guys. I think I'm gonna wrap it up. Yeah, you could roll over losses, but hopefully you don't get to that point, because that would be brutal. But yeah, I recorded this video for you guys, so if anyone missed anything earlier,